late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to do a little update. I want to talk about some of the positions we have open. Again, this is going to be about protecting those positions because if you're unaware, there is a lot of news going on right now, a lot of escalations when it comes to the Israel-Iran war. So basically what we're going to do is we need to come in here, take a look at our assets, let's see what the market's doing, and then we'll talk about protecting some positions here. So we're taking a look at CoreWeave. If we take a look at our normal indicators here, so we've got our DMI, we've got our vortex, we've got our relative strength, and we've got our MACD here. We can take a look, see what we're kind of looking at. We do have some doubles here, so I'll get rid of those, but yeah, so essentially we'll flip to the lower time frame because we don't quite have that price action on the higher time frame quite yet. What we do see is a bit of a good move here. You know, we aren't getting a ton of volume, so I'm a little weary about this move right now. We were kind of in this trend line here. We broke down. We are getting back above it for now, so we can kind of continue up for now. We can see we do have this support in through here, so a bit of a trend line, a bit of kind of horizontal support just coming in up through there. And same thing, also similar here, just acting as prior resistance, now support. So we could continue to the upside. What I've done here is actually take a little bit more profits off the table because we're up a substantial amount in this trade. So we got in at $39 and we're currently up over 300%. So for me, I got to $78 on, kind of took half off the table. I talked about taking the initial investment off, making it a risk-free trade. We're now up 2 times from that point as well. So I'm just going to take another half off the table. Worst case that happens is this continues running and I've missed a little bit of upside here on the position. I'm okay with that. I would rather just stay within my strategy, within my risk tolerance, and realize those profits, because a 200% realized return with a free position, so you have to keep in mind, because of the money that we've taken out of this trade, we still, and with the price increase, we still have the same amount of value that we started with. But what we've been able to do is realize twice as much profit, so 200% profits, and we've got that free position. So ultimately, we could continue up, in which case I'm going to look to continue capitalizing on the upside. Otherwise, we might eventually actually get a breakdown. So like I said, this has just moved insanely here, just straight up since we basically got in over here. We saw this is when kind of the start of the parabolic move started. So we can pay attention to that. We need to keep our Fibonacci levels in mind, and we see when we look at the 4-hour, the only major buy order blocks that we see are much lower here down towards this trend line. So that's where I'm going to be looking to reinvest my profits back down here, rather than, you know, getting greedy, not taking the profits as they come. I don't want to round trip those. If you don't want to take the profits, at least utilize a stop loss. You know, you might look at having a stop loss right here underneath this support, kind of in that 140 range, could be a good area. For me, I'm happy with that 200% returns in this short amount of time. That's about 100% on the position, almost per month really, since we kind of got in. We got in back here in May, so not even, it's been a month. So every 2 weeks, we've basically been given a double move here in CoreWeave. So booking those profits, adding that to the cash position, and then looking to either put that back in at a lower price, or we're going to just go and utilize that cash elsewhere for a different trade. This is what I talk about, really compound these trades. That's how you really build those profits, rather than, you know, you buy into stuff, you round trip it for a long period of time. Let's say, you know, over the span of a few months, you buy in, it goes up about 2-3x, you hold on and you don't take those profits, it comes back down to your entry. You know, you're not able to build the position as effectively, and you're not able to compound profits as effectively. So that's what I talk about. You know, a lot of people focus on wealth growth. I think wealth preservation should always be the first and foremost principle that we practice. You can't grow your capital if you're losing it, or if you're not if you're not protecting those positions as those profits come. So we don't want to round trip. We want to make sure that we're mitigating risk, but we also want to make sure that we're maintaining some exposure to the upside. So what we see here, taking a look at NVIDIA, this is another one that we bought in the dip at an average cost of about 101. We're up 43% or so right now, currently with a stop loss at 120. We can look to move our stop loss up because the price action has continued up here. So when we're looking at the 4-hourly, we could bump our stop loss up to, this would be more conservative here, kind of up towards 130. If you want to be really conservative and kind of protect as much profits as possible, looking at a stop loss anywhere from that 130 to 140 range. Let's take a look at the daily chart and see kind of what our support is looking like here. So we kind of see we've got this low here, and we've also got another low here. If I had a stop loss in the mid 130s, then you kind of protect that potential downside. If we start to come down and tag that level, we're going to lose these lows, and then the likely price action is kind of that downwards price action like that. So I'm going to have my stop loss for NVIDIA around 130 or $135. And that's going to protect about 35% profits on the position. If it hits my stop loss, we're out of the trade, we've booked that profit, and then we look to put that back into the market. So we're not worried, just because we get stopped out of a profitable trade, there's nothing to be upset about. Don't kick yourself for ever making money in this market, especially when you're realizing that profit. So the difference between realized and unrealized profits is massive, and we want to make sure that we're actually realizing profits on a consistent basis and compounding those profits. So that's what we're going to do with NVIDIA. With CoreWeave, we'll look at Super Microcomputer here. We'll just go down the list. So we've got the SPY, we've got the QQQ. We'll take a look at those at the end. We're going to take a look at BABA here. So this is another one that I'm pretty interested in. Big AI player when it comes to China. So we did see this previous trade, beautiful one, played out, and then we took our profits, we got out, we avoided the downside, and we kind of were able to take advantage of the dip in that flash crash. Again, another nice little trade here. So that's what I talk about. You can play these big assets multiple times. You don't always have to take the risk in kind of low cap or very volatile speculative crypto stocks. I think there's a lot of value to just really paying attention to the big players in this space and then playing the charts, and we're able to compound those trades. So we are currently kind of in a bit of a downtrend here. We did manage to get this higher high and higher low. We want to see these highs being taken out again, and then that subsequent higher low. We did almost come back to that 618, so potential entry there. Didn't quite get down to our target range, but if you're a BABA bull, that's what I talk about, that margin of error. So within a couple percent, if you're targeting 110 as your entry and it goes to 112 and you don't buy anything, that's kind of why I say just have a little bit of flexibility. The difference there is less than 1%, and that's going to be the difference between you getting that entry or not. So BABA is one I would consider. We did excuse me, we did kind of get stopped out of that one as well. We took our profits off the table. We didn't take the whole position off the table. So we are in basically from, $100 a share, rode up. We took about 20% profits off the table, and now we're just holding that position for now. If it comes back to around $100, anywhere in this region could be a decent DCA, all the way down to this zone here. We've got that 200-week moving average. We've got a big buy order block down here, so definitely some potential to pick up BABA down there if the market starts to show some weakness. We can also see that these three moving averages are now resistance, so I maybe do think we come back, retag that 200-day just like we did back over here. So watch for that. Could be that potential entry there in BABA where we look to put a little bit of profits back in. MP here is up to $35. We recently opened this position. I talked about the fundamental reasons as well as the chart behind it. This has been a really great move. Another one that we kind of caught. So I opened my position at $25. I got in a little bit too early, but I did manage to bring that cost basis down on this drop here. We are targeting that $18 entry. You know, it's what I said, my margin of error, $18.65. It's close enough. I put more money into the market, brought that cost basis down to about $21.75, and we've just been ripping since then. So another really good move. We can see from this low here at 1861, we're up almost 100%. So if you entered down here sub $20, we want to look to protect those profits. Again, we don't want to round trip this thing, but look at this beautiful volume here. So lots of buying volume there. It is increasing, which is great to see, and beautiful price action. We've got our moving averages curling up, but this is a pretty big extension. This has been quite a volatile stock. You know, lots of days, you know, look at these big candles here. So again, just what we want to do, if you're in this position, you're up 60%, we're going to look to protect those profits. For me, I'm going to put a stop loss at about $30. There is a little bit of a gap fill here, so there is the chance we come back and take that out. Basically, if we come back, hit my stop loss at $30, I'll book about 50% profits on the position, add that to the cash position, and then again, look to recycle it back in at a lower date, or a lower price, sorry. We'll take a look at MicroStrategy here. We kind of see broken out of these two major downtrends, although we are stuck under resistance in a bit of a bearish pattern here. So we've got the bear flag pattern, and we also see stuck under this pivot high resistance and lots of sell order blocks up here. The next entry for me in MicroStrategy, you know, I'm looking at this spot down here in that 618 down to the 786, a retest of these breakouts, as well as that 200-day moving average. Let's also take a look at our VRVP, see if we've got some confluence there. We're actually underneath that point of control, so again, a little bit of resistance. Watch for this price action to potentially play out, where we're going to have to come back and retest these lower levels. That's a little bit of what I'm worried about for now. MicroStrategy, we took our profit off the table as well at 375, so we're holding the initial investment value with that realized profit. So that's what I'm thinking for MicroStrategy for now. SMCI, we are up 9%. I'm not going to worry about that right now. This is a newer position. It's a little bit smaller right now. I haven't fully allocated to this company quite yet. I like to spread my buys out over a few different levels. So in terms of SMCI, we're just going to hold it for now. No stop loss. We'll take a look at Tempest AI though. I'll take a look at SMCI for you. If you missed the entry, we'll take a look and see what we would makes sense for the next probable entry. Yeah, so kind of this zone in through here, lots of confluence of support, looking at that sub $40 down to about $35 or so for SMCI if you missed that entry. So we'll go from SMCI, and then we'll take a look at Tempest, and then we'll take a look at Metaplanet and Tesla as well. So we've got Tempest AI here, excuse me. What do we, and then so yeah, what we see here, Tempest AI looking pretty strong. We're going to adjust our Fibonacci retracement here, and look at this. This is why I really say look for that confluence of support with the Fibonacci levels. And we had this beautiful breakout. We pulled our level, we waited patiently, we got our entry, and we're already sitting nicely in profits. So that's what I talk about. Have this strategy. It's the same thing across the board. I just play this over and over, just always focusing on the same core tools, the same skills, and applying it to different time sets, different time frames. So we see here looking for that potential entry in Tempest at about 64 up to about $66 if you missed the entry back down here. But otherwise, there is way more support down here for me personally. Again, this is a position that I'm not going to have a stop loss on it for now. Potentially you could put it at entry if you want to avoid any downside, since we are up 20%, but I would look to potentially build my position in this region down here. This is, again, I mentioned a Nancy Pelosi AI stock, so she is kind of the best investor, the best political investor, the most successful, seems to just pick all the right stocks at the right times. So for me, I don't feel too bad getting into a position down here. Really looking to build that. Again, similar to SMCI, it's a newer position. We haven't fully allocated the full amount of capital that we are wanting to kind of put in. Depending on the on each trade, it depends how much you're going to kind of risk. This is MetaPlanet here. This is another one that we opened a new position in. We saw this huge pump up here and then a massive dump back down to about $5.50. Not quite nailing the lows. We got in just under $6. We doubled our money. We pulled half off the table, and now we are sitting on a free position with that cash in the bank. This is one that it's just running so much on hype and FOMO right now that I'm gonna just hold what I have. It's a risk-free position. I'm gonna try and capitalize on a bit more volatility in this stock for now. So that's kind of it for now. We see Tesla also. Tesla's another one. I'm just happy holding that on a longer term basis. I'm not really too worried about it, but that's essentially what I wanted to talk about. Just update all our current stocks that we have open, as well as, you know, take a look at some stop losses, a look at some profit taking. Now we can flip back over to the macro side of things. We'll take a quick look at what's going on. We see the dollar here showing some relief, but downtrending. Again, that's good for our risk on assets. We see the US 10-year coming down a little bit here today, breaking down under this trend line. So also we do want to see that continuing to come down. We have an FOMC meeting today, so more volatility likely. The odds are that they're going to just keep rates the same, especially given all of the news out there, all of the economic data. I would be very surprised if we got a rate cut. If we do get one, we might get something like a 25 basis points cut, so nothing too crazy. Volatility coming in here, putting in that higher low and looking like it's going to bounce again, so we need to pay attention. Like I said, similar to over here, we broke out, came back, retested, and then broke above and put in this crazy big pump in volatility. Generally speaking, large swings in the market happen around these instances here, so depending on the setups at the time, we can look at the SPY here. Let's take a look at our 4-hour and let's look at our indicators and see what we're looking like. So this is not looking very good on the low time frame. We've talked about the bearish divergence, so lower highs on the RSI. We've got the DMI bearish momentum picking up here. We've got bearish momentum picking up on the Vortex indicator, and the MACD and the RSI look like they aren't able to break out. They're curling over and continuing downwards. So S&P on the near term looks a little bit weak in my opinion. Gold again is showing more strength. It's holding this pivot high. It's holding this breakout. War fears are still out there. Market uncertainty. FOMC later. So just all kinds of things, all kinds of different things that could bring a lot more volatility to the market, uncertainty. So during these times, I really want to make sure I'm protecting my capital that I have gained. This has been a pretty impressive move from all the markets off the lows. We've basically been straight up since the major lows, the major crashes, and I don't think markets go straight up forever. I never really follow that thesis. So for me, I want to book those profits. I want to maintain the exposure that I'm most convicted in, but I also want to make sure that I'm mitigating risk. I'm not getting too far ahead of myself because, again, it's just the same strategy that's worked for me over the years. You know, wait patiently, find the fundamental value, look for the best technical entries, and then yet again the patience comes back in play where you have to wait for that entry. I'm never in a rush to make a trade. I'm never in a rush to get in or out of the market. I'm basically just, again, trying to do everything very calculated, so just trying to take that emotion out of it. That's why I teach these skills. That's why I teach the charting. It just gives you the ability to make technical levels. When those levels are breached, then you have a plan of action, whether that's to de-risk, whether that's to buy more. It's all different, and same, all of our strategies are slightly different. You don't need to take profits when I take profits. You don't need to use the stop losses is that I use. It's all up to you guys. I want to be here to show you how to use these skills, and then you can apply them in your own trades. And I've really enjoyed kind of seeing a lot of different members, especially in Telegram, you know, seeing them take their own trades with the skills, seeing them booking profits. You know, it's really awesome. One guy even, you know, yesterday he said that he's doubled his speculative trading account since following the channel. And you know, he likes to give the credit to me, but you know, you are the one that has to press the buy button. You're the one that has to watch these videos, take the time to learn these skills, learn these tools, apply them yourselves. So definitely don't cut yourself short. Give yourself a lot of credit. You know, it is very daunting kind of getting into this space and taking your financial freedom into your own hands. But what I want to show you is that with the right system and with the right passion and knowledge, we can do it successfully, and we can really mitigate that traditional risk seen in throughout kind of the investment world. So thank you so much for watching, guys, and I'll see you in the next one.